Good morning, guys. Welcome to the Outcast Trading channel. My name is Jack, and as I want to make it as usual, we're meeting in the London Open because it's Wednesday. I missed yesterday's stream, but apparently the nursery room my kiddo is going is closed, so we have to share and Kate works. So you know, this is how it works. I had to take care of a kiddo, and I'm just connecting to the Outcast Trading channel and waiting for some members to come and maybe ask questions. But before we do so, I'm continuing my $50 challenge. And if you like this video and if you like this stream, just like and subscribe as always. Please do. It helps us a lot to get the wider publicity. For some reason, some garbage guys outside are picking up garbage at the same time I'm making a stream, so well, it happens. Okay, so let's go with a little bit of a market analysis, but before so, here's my account. I had a kind of a losing streak last 2 days, so I lost like $26 out of the account, which might be good, but as I say, it's really hard to manage the risk on a smaller account. This is not what I'm usually doing on my normal account. I'm keeping to 1-2% risk per trade. Here apparently I had to keep it at 5% because of the stop loss and minimum position sizes. So yeah, as I said, this account will be a little bit volatile. But honestly, last 2 days, the price action was shit in a way that no direction, no really clear range, and just going up and down, hunting for liquidity, getting chopped out. I got a little bit chopped out. I got a little bit trapped in a nice trade, which turned out to be another loser, so I stopped trading, and I'm coming back today and waiting for FOMC, because today we have FOMC minutes. What does it mean for me from my trading perspective? Well, it's hard to manage risk on it, so I'm not trading it. I will be staying away from the market when this happens, and this, as far as I remember, should happen around when we have in 11 hours, so we have plenty of time to make some money and lose some money. Anyway, let's jump into the markets and let's start getting organized for today, because I didn't make any analysis yesterday evening for myself, so I need to know what the markets are doing. And when we talk about the markets, we'll talk probably a little bit about overcoming the losing streaks, so overcoming the losers, and how to keep your pace in this game. At least this is what I do. So what we have, let's start from GBP USD. Let's start from crypto, because this is the exciting part of the stream, which is actually the most boring, because crypto is still in the same old range. BTC between 18,900, let's call it 18,600. I'm sorry, my eyes, I need my glasses. Anyway, 18,600 up to 24,500. This is the current range for BTC. As you can see, pretty easy targets to the upside, to the downside when it breaks, if it breaks. So far, same old shit. So nothing's happening. Volatility is close to zero, or even as you look at the chart below zero, it just doesn't move. Well, but this is crypto, it should move, No, it's just another asset which is touched by the global economy. So one more explanation why this happens, in my opinion. So from what I know and from what I understand the markets, whenever the inflation spikes a lot, like let's say above 6%, when the global economy is tanking, when there are wars around and close to European border, And when there is unstable global economy, most of the investors and traders, they get out of the risky assets. And because they get out of the risky assets, well, crypto is one of them. I mean, you can be a believer or not in the whole blockchain and crypto and all this movement. Whatever you think about it, it is a risky asset. It used to be high volatility asset, and we'll talk about it in a minute. But it is risky. It is low liquidity. People will get out of it, get to safe havens of bonds and looking for other investments when they can. The same goes with the stocks and what you can make money on, what is trending in such situations. First of all, you have energy and oil. And second of all, what you have Forex, because if you look at the crypto volatility right now, so we have Ethereum staying in the range of 1250 up to 1400, which range is around 13%, and it stays, like for crypto it's nothing, and it stays in this range since 21st of September, even a little bit earlier. So we got like 4 weeks already, 4 weeks, 3 weeks of the price action being absolute garbage and staying in the sidelines, which, by the way, markets most likely are doing on lower time frames. So if you want a trend, you go to really low time frame because they're micro trends, and you want to go to really high time frame because then it's trending. Overall, from my short-term perspective and today perspective, Ethereum is still in the range. Just bounced yesterday a little bit on the support, no conviction here. I think the market is waiting for inflation tomorrow. FOMC might got a little nice play here. But what do I think about those events? I'm not trading it, and I'm not trading them because there is volatility which is spiking and low liquidity. Because if you think all the professional traders or all the day traders, when there is a big economical news and there is an uncertain output of it, so market will price in probable cause, but if it differs, you don't know where the market moves. Like last week we had a really nice bullish setup like on GBP USD, and then we got NFP and it just tanked straight from there in 1, 2, 3, 4, 5 seconds. It was literally just a mayhem. That's why you stay away from the market. The market will be here, there will be some opportunities, maybe not tomorrow, maybe not today, but afterwards there will be something to trade off over time. So yeah, back to crypto. Our main assets, especially Ethereum, after this whole thing. That's why I don't like fundamentals, because like everybody was bullish, all the bullish news and the proof of stake coming in, which I'm not a technical guy, but this means nothing if it comes to the market. Honestly, big money doesn't care about this shit, really. What most of the traders, what most of the investment companies care about, not fundamentals. They care about the fucking money which you can make on it. And right now there is no money in crypto. I'm not saying it will be forever, but overall it's a consolidation coming from a downtrend. Not shorting here because this is a support. The resistance is coming around 4-hour 200 EMA and SMA, and my personal bias buster for most of the assets is 4-hour 200 EMA. Just without looking at the price action structure, at how the lower highs, higher lows, you can just look at the 200 EMA. This is this red line. If it's sloping down and the price is trending mostly below it, or you can use like a shorter time EMA, like 21 EMA. So if 21 EMA is below the 200 and both are more or less, at least the higher one, 200 sloping down, you can be sure right now it is a downtrend and nothing is changing for me. So this is my bias buster, which means I will be putting less risk on longs, more risk on shorts in such scenario. So here we go with crypto. As I said, crypto right now is shit, low volatility, nothing happening. The easiest trades you can make, and you could make yesterday long the bottom of the range, try closing it above it. Most likely I would take at least half of the profits at the at the mean of the range, at the middle of the range, which right now 55 EMA is pointing almost perfectly. With BTC, lower time frames than daily, it's not worth going. It's just consolidating. Volatility is dropping. Look at the weekly Bollinger Bands. On BTC, they are still pretty wide for it. But if you go to Ethereum, they're just going closer and closer together. So there's a squeeze coming. Which direction? I don't know. I'm not trading it recently. And because, like, as I said, Ethereum has 13% volatility. Let's see what GBP USD had to offer us last few weeks. Wow, it's 11% up on Forex, the market which doesn't move, and you can't make money in it. Well, guess what? People, when they are running out of the risky assets, the assets which will be for sure moving, I'm not saying the direction, but will be moving, and such a geopolitical mess which we have right now, and economical mess which we have right now, will be currencies once against each other. They're like a blue ink test for economies. Like, if you think about the economy, about the country, the currency is number one thing. You think about strength or weakness of the currency, which is more or less represented by people trading it, and the hopes for the future for this country. Anyway, like with GBP USD, and let's jump back into the Forex. GBP USD it's kind of a mess for last 2 days. As I said, probably waiting for some nice news and to move. This market is ridiculous. So what we had yesterday, we had a really nice fake out to the upside after 2 days of consolidation here without no clear range, really. Like, if we go to 15-minute, it was just a mess. You could play Bollinger Bands in my strategy, but basically this types of the price action, like one dildo up, one dildo down, up, down, up, down, this is like whole London and US. It's nothing. But what happened from my perspective as a trader? First of all, after this, after hours for me, dump and rejection of the 200 EMA and SMA ribbon on the 1 hour, which was looking pretty good, like close above the 200 EMA and follow through. But guys, like, this is why I use two of them, 200 EMA and SMA, well, let's see, guys joined, and okay. Hello, Captain, by the way. Okay, so we have what I was saying. Okay, I'm using 200 EMA and SMA all together. Why? I find it pretty useful. Some of people can say they're not mathematically correlated, it's just a bullshit. No, it's not a bullshit, because if you think about how all the moving averages with some variances, some changes are calculated, so the basis is the history of X periods and making an average out of it. And you can make an exponential moving average, you can make volume weighted moving average, you can make a lot of them. Standard one is the oldest one using, and this is the easiest one to calculate. And as far as I was told in my past, I don't know if it's true, but still many professional traders, still many money-making companies, let's call it a big money for us, so they are still using it. And because those two are being used, 200 EMA and SMA, 200 SMA will be lagging. It will be less reactive, and because of it, it will make with the 200 EMA a little bit of a ribbon. So you can see when the price action gets in between those two, it tends to stay a little, it's like a sticky zone, and I treat it as a zone. So I never go like closure above the 200 EMA and I'm going long. It's not like this. At least what works for me, it's a little bit of thinking in the zones, meaning that it's not just a magical line which is magically being respected, but it's more like a zone which tends to draw price in, and price likes to react out of it. Sometimes you can have just a touch, but most of the time, as you can see, it will be a little bit more. With this zone, it was rejected by its zone, came back down, and it came back down to 0.5 retracement, which I was aiming, and I didn't think about it, testing it higher here, but 0.5, which is top of this liquidity zone, which I had marked on last stream. So apparently there is no trade for me today. and this dump happened already evening my time, so I was not trading it. But overall GBP/USD is reacting here. It is in a short-term downtrend, really sloppy one and really tiring, but this is what you can expect when there are big news like inflation rates coming this week, and well, nobody really knows what it will be. And the whole market is just, in my opinion, it just looks like it's waiting for them. And because we don't trade in news, at least I don't trade in news, then I probably won't have a good trade today. So sorry for that. But here's the zone. Any more touch here, I might be interested in longing out of it. I think it's putting a solid base for the price action short term right now. Overall, if you go to the higher time frames like daily, it's below the daily 21 EMA, still trending down. But remember guys, this asset is trending below in the territory never seen since 84, and even traded below 1984. So we have like what, 38 years of price action, okay, and it was never here. So it might spend a little bit of time, fuckery going on, but overall, well, I can't be bullish on it, like truly. I can't be really bearish right now in this territory. Overall, the main range, the big range, will be like the swing low, swing high for now, with this tough zone, 0.5 retrace. It's not that I love 0.5 retrace, it's not fib number. I find more edge around 61866, but overall, for me, it should, as you can see, it is providing some support. So now let's go to Euro USD, and let's go to Euro USD because Euro USD, I hope you can see something on my charts. So we were aiming for this 61866. So this is the same story like on GBP USD, a little bit different. So we have a fib measurement of the whole swing. 61866 is coming here, and as you can see, Euro USD was playing around it for last 2 days. And had a nice little pump yesterday out of nowhere, back to 0.5, trying to go to 200 EMA, didn't reach it, and now back again at the support. So the only real trade here which you could make out of it somehow, and look at it, at least in my opinion, and one disclosure, I'm trading my own money here. This is for fun purposes. Don't try copy trade me, and don't treat it as a financial advice, because it's not one of them. I'm just talking what I think about the market, and at the end of the day, it doesn't mean what I think about the market, it's what I trade. So here we have also the support. I could move a little bit a general support here. This is, anyway, once again, it's like thinking at the support as a zone. So this is a zone, this is a price region where price tends to bounce, reverse. And yeah, probably people switched to I need to share my screen on the Discord too. Nobody said to me I'm not doing it. So there's certain habits of streaming which I'm still learning, and I forget about them, and nobody says to me, you know, like, you have to learn certain habits. When I learned trading, I figured out that figuring out the proper habits and learning those and getting them working for me, it's the most important part of it. So no strategy, not really like the like a TA and magical strategies, no holy grail, but working on my habits and how I approach the market on daily basis, and also like understanding my own psychology, which is my biggest enemy and also my biggest friends here. So with Euro USD, the same good old shit. So it is a 618 retrace. The stocks on the daily also are trying to curve up. So I personally, what I think, if it bounces, we have a chance for it to go 98,330, and it looks for me like it made a swing high, and it's working at least on an illusion of trying to make a higher low here. So after we have a higher low, then maybe another higher high after that one, and maybe a little bit of an uptrend, I don't know. Still on a daily perspective, below the daily 21 EMA, everything stopping down, 200 EMA and SMA also on a daily, and they're just they just don't look like they won't stop soon. So probably sometime here and more downside. Hard to judge. I'm not trying to predict what the market will do. I'm trying to take actions on what market is doing right now and trying to stay a little bit ahead in this game and try to find zones where I will be interested in taking a trade. And right now, somewhere here, maybe I will take a trade, but because today is FOMC, I think the markets will be just stalling and just playing around all this time. So probably some of the guys are getting excited. Okay, no news, we can trade finally. No, it's actually like when you have a big news coming this week, but you have 2 or 3 days before that without any news, most of the time market will be just stalling and will be just in a bullshit mode, which I should have noticed, then I wouldn't lose my money. But we all make mistakes, right? And this is for fun and for purposes. We are already trading on this account. The profits which I made out of this $50, the $50 with some profits, like $30 profit, is already withdrawn from the account, so it's free money. It's money thanks to the other side of my trade takers. Thank you guys for it, because without you I wouldn't make money, so somebody needs to be on the other side. Okay, so let's go to USD and well, it's a little bit of complicated picture right now, but I hope you can see what is my way of thinking in it. I'm hard to really be bearish on a US dollar right now, and I don't want to be standing in front of the running train, so I'm not shorting it. But I had a general idea. I don't know what time frame was. Okay, it was 4 hour. So we got a 4 hour like a big triangle here. Then it broke, and then it went up to another level, to parity level. Once again, it's all about parity. Like, isn't it strange? I know it's time for tinfoil hat, but all the currencies, like majors, like GBP, Euro, and CHF are right now almost at parity. All of them are more or less the same. So why do you need an exchange? Just get us one global currency, and I think it's all about it. So overall, it was a daily level which it reacted, the parity. Right now it tries to probably consolidate here a little, like a triangle-ish. If it dumps below the 98,800, I will be more bearish about it, especially if it starts closing below the 200 EMA and SMA. But overall, if you look, once again, my general bias buster is not what I use in general for trading, but more for trying to nail my risk and which side I want to be mostly on. So right now it's long. 200 EMA and SMA are both going up, 21 is above them, so it's bullish. GBP JPY, it's the Widowmaker and the Beast. I know some of you are waiting for it, and the Widowmaker and the Beast is actually doing nothing. Okay, so it was looking short. I mean, this is what I would be tricked on. It was the short on the 200 EMA and SMA. Here was a perfect picture, perfect setup. Like if you go with the hourly, nice one here. But what it did, it decided to fake down, then fake up. And look guys, it closed above the 200 SMA also, and it should moon, but it didn't, and it showed yesterday. So market will be always right. Whatever you think about it, trying to predict it is worthless, it's nonsense. And if you find guys on the internet trying to say where the market will go in next fucking, I don't know, week, 2 month, nobody the fuck knows where it will go, okay? Nobody in the world. You can't predict it. Nobody knows the future. I mean, probably there are some psychos claiming they can. I don't believe in this shit. I think nobody knows the future. But what we can do, and this is how we make money, we take actions on the actual what the price is doing right now, and this is what I'm interested. Is it at a key level? Is it at a level I'm interested in taking a trade? So this is a key level for me, because there are many definitions. If it is worth for me taking a risk, and how I want to manage my risks, those are the questions of the trader. Where market will go is the question of a lazy fucker who doesn't want to put work to make money, and he thinks he can just buy and hold for years. And for some assets it worked until now. Now it's not working, so it's time to work really for your money. So here it is. We have a sloppy downtrend. Looks like a little bit of a of a more downside coming, like this reaction of this region. Overall, GBP JPY, I think we have a chance to go to 157 200. If it goes there, I will be happy to take a long, at least for a bounce. If I can find any good opportunity for a short, and let's go with like a 15-minute time frame. So probably what we can do here, we can do a little bit of and Mark will be proud again. I think he will be proud of me, of using those fibs. So 61866 would be a really nice area to take a short here, or close your long if you longed before the London Open. But the London opens in 30 minutes and we still have plenty of time to judge and find some setups. Overall short here might be a good idea for me. I will see if I will take it. Anyway, it looks for me just by the way I said it, and I will say it once again, MetaTrader is horrible for charting, but it's wonderful for trading, at least for me. I learned on MetaTrader, I'm using MetaTrader. Probably there are different better software for it, but I actually like using it. So here we have like a falling channel, and some of people would say like cup and handle or whatever shit. Yeah, cup and handle, as far as I remember, it's not a reversal pattern, it's the continuation pattern. So it would mean that it has to continue, so it doesn't make sense. Okay, patterns in general, they're, I don't know, they offer too low hit ratio to actually trade them, at least for me. So here we have GBP JPY. Overall, as all the assets, like on the beast, the actual chart is not so bad. Like if you look at the macro, so we have GBP USD, Euro USD, and general fucking downtrend since for last I don't know, for last year or 1 year and a half. It's in a fucking downtrend. Well, then the beast, the Widowmaker, is making widows and is being a beast because it's just in a fucking goddamn range or whatever, however you call it. It's just a giant oscillator, how the Forex is supposed to be, but right now it's a trending market. So let's go once again. So we got almost all the markets I'm trading right now, we got them covered. Nobody is on the chart, I'm probably in the future. Here we have most of the markets covered, and one more, it will be Nasdaq. And what I think about it, okay, it is on a support on a weekly, it has closed and retested 200 EMA and SMA, and they are not in the correct order here for short yet, so it might take some time. But you have to notice that this is we have already two weekly dildos closing below the 200 EMA and SMA, and as far as I have history on the price action here, it never happened in the whole fucking history of trading Nasdaq on evolved markets, because this is the chart I have. Okay, so they have a data coming to 2009, and since 2009 we can say it never happened like that.
Hey Jackie, we can't hear you.
So since when you can't hear me? Can you hear me right now?
Yeah, I can hear you now. About 4 minutes. Sorry, buddy.
Yeah, that's okay. That's okay. We have technical difficulties. So apparently last 4 minutes were not heard. Last 4 minutes were not heard. So I need to think about where I was last 4 minutes. And I was probably on the Nasdaq or...
Yeah, the chart before that.
Chart before that. And chart before that was GBP JPY. That one.
Yeah, and then you expanded it down. You said it was in a downtrend for about 1.5 years. Is that the one? That's the last I've heard.
Yeah. Just give me a second. Yeah. So GBP JPY is in the uptrend. But if you look, it's holding pretty good. Like, forgive me my drawings here, but this is just a consolidation here. It is just a range. It's like Forex supposed to be. It should be just a giant oscillator at the end of the day. But what I can say more. Yeah, sounds right. I know, Mark. Thank you. Probably it's working right now. Yeah, I can hear myself. Good. So with GBP JPY, it is in a range, but GBP USD, all the USD trading pairs, they're just in a downtrend for last 1.5 years. So, well, Beast is just making its own story. It's called Widowmaker for a reason. And what I wanted to say, yeah, let's go to the Nasdaq and let's go back to the weekly. So once again, because you didn't hear me, Nasdaq is in a downtrend right now, and there are a few things to from my perspective to think about. I'm not day trading it, so I won't go into lower time frames, but what I'm going is with fibs. So first of all, we got fibs and we can go with this measurement, but the problem is that I don't have too much confluence around 61866 here, maybe 618, a little bit of a support, but you can find a good support here if we get and this is why you don't want to use 1 2 alone. Look for the rule of 3, a confluence of 2 3 preferably, things pointing the same zone as a technical tool. So here is the support at 96.60, and because we have one event which happened, and it didn't happen since 2009, because this is as much as data I have on Evolve Markets, which I'm trading right now, and I'm using the chart I'm trading on, not TradingView. So we had 2 already weekly closes and 2 weekly opens below the 200 EMA and SMA since 2009. So this is something which you can call a little bit of a change of behavior, looking just on the EMAs. Can it go lower? Yes, it can. Can it go higher? Yes, it can. But this is something worth looking. And if we have another weekly closing like this or below the 200 EMA and SMA, I think I might safely call that if the price comes to 96.60, I will be interested in closing short if I'm in any short, and probably I might try longing it for a bounce, because this zone looks nice and it is a solid support coming from the former resistance, former swing. So yeah, it looks good. Right now it is on the support and just playing around like all the markets, waiting for what will be the inflation rates. Let's go with the Goldie before we talk a little bit more about psychology. So gold is the same old story. I was looking on gold. I didn't show it on last stream, sorry for it, but I'm just getting used to it. This is the second stream of my life, so I'm still celebrating. So what we had, I was looking for short here at this region. Apparently it came after my hours. I just didn't take a look. I was looking at the Forex at the time. So this is like it was like a good opportunity here for me to short it. It's a nice tough zone which was broken to the downside again, retested, and right now nobody knows what will happen next. But gold overall, if we come for the weekly, so one thing which I wanted to tell about the gold, and I believe we're on the same page with many traders here. So gold was in two-year range. Okay, it was just ranging, and we'll go to the higher time frame in a minute. And what it did, it broke this range, had close, follow through, retest, and after retest, I mean, it's not looking good, Governor. Anyway, on the monthly, I don't have yearly here, but this is like an annual bearish divergence here and here. So this chart basically on the monthly looks like a BTC on weekly half a year ago or more. Anyway, what happens here? It's coming back below this range, and the easiest move which you can make out of it. Oh fuck, wrong tool. Well, Jackie, you got to learn this shit to entertain people. At least you think you're entertaining them. Okay, so here we have the measure move to the downside, the conservative one, which will be confluent or not, more or less, with this support coming. Once again, we'll mark it as a zone, because this is how I think about supports, resistances, just liquidity, just a little bit of a zone, not directly a line. I will be using lines for more direct trading and trading decisions, because it's easier and more clear and it's slap in your face. Okay, get out of the trade, get in that trade, and this is what I want as a trader. But overall, like from analysis point of view, gold is fucking looking wrecked. And if we go with more aggressive using the wicks, which by the way I'm a huge believer in wicks, yeah, it's wicking below the zone. So what about wicks? Wicks. Strange. English is a really hard language. You should learn Polish, guys. So if I learn why I'm using wicks, first of all, I learned that most of the business is done in wicks, and if you think about it, why they are on the chart, why those dildos are not just blocks? Well, because some of the people were trying to trade above and they were pushed back down, or were trying to trade below and were pushed back up. So in those weeks, if you go with some more advanced analysis, like volume analysis at this volume profile, which I don't have here, you can find that most of the business, most of the volume is actually done there, and that's why you can't omit them. I mean, there is a whole myths, and some people are teaching them even for money to other people on the internet, and talking like use bodies and you can use one strategy to make your life better. It's bullshit. Okay, so you have to, at least for me, and I'm talking from my perspective. So here, you have to look a little bit from a perspective of what's going on, a little bit of understanding, and understand in those weeks, especially those two, there is a powerful volume and powerful potential, because they tell you, and they tell you a lot. And of course we can use as a bottom of the zone, we can use the bodies, because this is where the price were closing opening. But overall it was trading in this territory, and it says to us that twice already, like a big time and a little more times, it was rejected from this territory and came back down, broke the support, and looks like it's coming more down. So gold is not looking good. I'm not bullish on gold. I'm not a believer in shiny assets. I believe in the current economical situation, gold and all the commodities, at least precious metals, will be good. Not right now, but they will be worth buying when we get into stagflation. Okay, so we'll get some market stagnation and inflation together, which is a rarity. But when we get there, then maybe some people looking to preserve a little bit of value, they will be uncertain. But overall, as you can see, gold, there is no gold standard since 70s in the world, so currencies are not connected to the gold. It's only used for, at least for more than crypto can be used for. So you can make jewelry, you can make electronics with it, you can use it in pharmacy, you can touch it, it's shiny, it's nice, and you can form it pretty easily. For most metals it's not reactive, etc, etc. So it has pretty good use, but it's just a commodity. Don't put too much meaning in something which is not correlated at all. Like gold is not inversely correlated or correlated to the inflation, to the, it's about the right now about how people feel safe about the market, how people think, and gold is not looking good right now. Okay, so we got gold, Australian dollar, US dollar. This is what I said. We had a nice little range. I was asked about it on Monday, broke this range, kind of retested. I'm still looking for it to come to 61 470 ish. If it comes there, well, I will be looking for a bounce at least. So far the range broke, measure move is here. So if you are in a short and if you were the lucky one, I mean, I would close like here. I can close like half of the trade, but overall I will be still looking for a little bit lower. Euro, New Zealand dollar. Yeah, I know. Okay, so Euro, New Zealand dollar, it's in a kind of a some of people would call it like a bull flag, bear flag, wherever. It's just consolidating here, and because it's consolidating here, here is the potential range, and I'll mark it as a zones again. So more or less you can see the price reacting here in this zone and waking above and here. So here we have the potential range, and right now it is in this range. So once again, if you are short from here, good job. I will be closing all of it here, and with some take profits in the meantime. If you're long, you should have taken profits, but if it breaks to the upside, then we have another one, and another easy way, and I hope I'm not giving too much for free, but here is the way you can go with the potential take profit, and here we can go with the same but different. Cheers for guys from Thailand. So here we have a potential bottom take profit. Overall, not much confluence here, and here I don't know because I didn't zoom out. Yeah, I mean the upside is is looking good as a resistance here, maybe a little bit lower, but as you can see here, this upside. Downside also, like both ways are possible here. So here we have the top potential take profits, the higher scale, and as you can see there is a lot of happening here in this zone. Mark would probably come and punish me with the volume profile and value area high and low. I don't know, I don't have this tool here, but I like to use it. So overall, yeah, short term, just a range. Okay, and you have two targets. To the upside, to the downside. To the downside, obviously, and it wouldn't be outcast without fibs. So obviously we have a little bit of a fibs, and what we can see, yeah, now even targets for downside 61866. This is worth buying for me. So look, guys, once again, what I'm doing when I'm analyzing the chart, I'm not trying to predict. I'm looking where I will be interested in the price. So this is the difference, and this is how you can tell somebody is a trader or bullshitter. Okay, so if you try to predict, then good luck with that. Put on your tinfoil hat and try to predict. But if you want to think about the market like a trader does, like a money maker, think about it. What if? Okay, so if the price comes here, what I will do? This is the question number one. And then you can think about how to find your zones of interest. Okay, so here we have Euro, NZD, USD, Canadian dollar, same story. Like it's still in the uptrend, 200 EMA up on a daily, on a 4 hour, on a daily probably too. or not. Yeah, on a daily too. It's a little bit of reaction about 138 to 80. So here is the zone on the bigger scale. Here's the potential bottom of the range. So this is the zone I'm looking in for a potential reversal. So if it starts close and the follow through below it, I will be looking for more downside. Right now, it's still in the uptrend. So only trying to find longs, not really shorts here. Okay, so we have almost all markets which I thought about covered today. Guys are absent from Discord, so let me talk a little bit more before the London Open about how to overcome the losers in your trading and in your life. So first of all, we spoke a little bit on a private part, because you have to know that this live is going for an hour. Then what I'll switch to Discord and the members, the Outcast members, and we'll talk a little bit more about the markets. So mostly we spend like 2 more hours there just talking about the markets, talking about everything. We're trying to be friends, and we're just having fun. So this is the benefit of being the outcast, the trading outcast. We think like nobody thinks. Here it goes. When you have losers, first of all, you have to realize that you're in the losing streak, because it's really easy to get a tunnel vision when you're losing money or winning money. And like if somebody is too much optimistic and is winning, you get the euphoria like in a casino, and you start risking more. And this is how people get wrecked in the casino. On the other side, if you're losing all the time, it's really easy to lose the horizon, to lose the point of reference, and it's really easy to just like, I don't know, just stop thinking positive, just stop thinking realistic, and you think like it all will be losers. But also it can trigger the revenge trading. So the common phrase which I hear from many people all the time: now let's make this money back, okay, from the market. And if you think like making money back, taking money back from the market, most likely you will be losing more. And we can talk about psychological reasons for it. I'm not a psychotherapist. I didn't study psychology, so I'm not qualified to really go deep into it. But what I can say from my perspective is that those two states, when you get euphoric or down, they're really, really hard to overcome, and they are really your enemy if you end up in them. The best thing you can do, and this is the advice for free: stop trading for a while. Like, take a day break or 2 days. The problem with us day traders, us gamblers in a living room of our homes or wherever you are, sometimes in the job, the problem with us is we don't have a risk manager, we don't have a floor manager, we don't have somebody to come to us, slap us in the back of our head and say, okay, you're done for today, come back, take a day or two, come back when you rest. Okay, so we don't have somebody watching us trading and keeping us in the bay. So if you encounter a losing streak, you have to realize, first of all, what you lost, it's gone, it's not your money. You can't take it back. It's legally earned by the broker, by the market from you. And you signed up for all the approvals when you signed up for the exchange. So it's legally taken. It's not stolen for you. It's not mean market which stole for you. You played a game with the market and you just lost. So you have to realize this thing. You have to take a break. And then remember, there's always next day, always next setup. As you can see, many people would FOMO in here. Okay, it's going up, it's trend reversal, it's going up, we're FOMOing in, buying anywhere here, and look what happened. Price got below. So the price tends to go up and down all the fucking time. Good morning, Mark. How are you?
Morning. How are we doing, everyone? Okay?
Yeah, I'm fine. I hope you're enjoying the stream with technical difficulties, as always.
No, it's going very well. Very well.
Cool. Nice to have you here. Anyway, so with those losers, with those streaks, you have to be patient and think about it. Okay, I'm not making money today. Maybe you're not making money, you're in a losing streak because something happened in your life, and this is like 99% of the cases. Your losses in the market most of the time, like those, I'm not talking about those being a part of your strategy, which are included in the strategy, but those additional losses, those losing streaks mostly come from your personal life, something coming outside of trading, not trading related. So if it comes outside of trading, then you have to fix what's wrong in your life before you trade again. It's not market, it's not evil market. It's nothing. Market doesn't think about you. Market doesn't know about you. You're too small of a fish. I mean, if you have billions of dollars in your pocket, then yeah, market probably can trace you. But like market in a way that other people will be tracing your moves, like they trace Warren Buffett, etc. But at the end of the day, market doesn't care about you, doesn't think about you. It's not a person. It doesn't have feelings. And even liquidity hunts, all this price action has a sense if it comes to big money and trying to gain the liquidity, to engineer the liquidity, and this is all about it. Nobody, well, maybe sometimes, but nobody does the shit like, look, there is Jackie on the other side of the screen, let's fuck him up and let's move the price up and down, let him lose money. No, you're losing money and it's your fault because you're losing money too much. You need to find a good reason what's happening in your life, most likely your family, your surroundings, how is it impacting you, because maybe the fault is there. So when you have this losing streak, first of all, stop trading, take a good rest, take a walk, take a day off, do something else, come back next day, chart again, and look, there will be price moving, there will be new opportunities. The beauty of a trader, not being an investor but a trader, is that you can use the price to make money both ways on short-term time frames. But if you are an investor, you're basically bull on the market, so you need the market to comply. If you're an investor, if you're a what's called diamond hands, then you're basically a loser who's giving the power over your actions to the market. When you are like thinking in a way, I'll buy and hold, then you're literally washing out the responsibility for losses, and then you will be blaming Elon Musk for something what's happened with your money when it was your decision just to let it go. And you're basically a gambler, bigger than us traders, day traders, because at least we try to do it in a more educated way and a little bit more realistic way. So we have a different approach. But if you're just buying and holding, then you're giving the power over your actions, over your losses to the market, and it's easy to blame a market. When you're a trader, then most of your mistakes, I'm not telling about the losers, but mistakes in trading will come from you. And you have to realize that it's okay to be a human here. I mean, the best perfect trader should be like a sociopath or whatever, somebody without feelings and emotions. But we have emotions, we are humans. I'm proud to be a human and proud to have emotions, and I wouldn't give it away for being able to trade market more efficiently. But what I can do here, I can find what's wrong and at least stop trading for a while, and then come back and okay, I lost such amount of money, I won some, I lost some, and I need to find another setup, and there is another day. Okay, manage my risk tight, and it all should be good over time. Okay, so this is my point about overcoming the losers. If you want to talk more, you can join the Outcast Discord for free, and you can subscribe to our membership, which will give you also, besides additional benefits, will give you the benefit of talking more on a voice channel every day with me, Mark, and EO, and analyzing the market, talking about the market, a little bit of coaching, a little bit of advices. We love to share, but because we love to share, I'd love you to like and subscribe this video. We got the London Open right now. I'm in no trade. I'm interested in possible long here at 0.5 or just trying to find any kind of a short, but today, this week, I'm just holding horses. So thank you for watching this video. You were patient enough to listen to me for almost an hour, and I salute you for it. We'll see each other tomorrow at the New York Open, and take care, trade safe, like and subscribe. Bye.